Welcome back to Open Exchange. The Department of Trade and Industry and the Japan External Trade Organization have agreed to jointly promote business ties between South Africa and Japanese companies. Now, this is the Japanese direct investment into South Africa has steadily increased in the recent years, amounting to around 20 billion rand in 2010. So joining us now for some more insight into the latest developments when it comes to trade finance in Africa, Yusuf Ali Khan, Head of Trade for Africa at Citi. Thanks for joining us today, Yusuf. So let's quickly take a look at that Asia-Africa story right now. Did you think that's significant in terms of where trade is right now between the two nations?
Absolutely. I think that's a very important announcement that was recently made by the Japanese government in the aftermath of the forum. But if we look at Asia-Africa flows, clearly China has the lion's share of that at the moment. We are seeing a lot of spending by Chinese policy banks, China Development Bank, China Exim Bank, who have written significantly large tickets in support of infrastructure projects across Africa. And this is driven by a strategic approach that China has to have a steady offtake of resources and minerals from the resource-rich African countries, be it South Africa.
So are you basically saying that DFIs, development financial institutions, play the key role when it comes to, if we're looking at the major trading partner, China?
Yeah, I believe that would be a correct assessment in terms of having deep pockets. Clearly, the Chinese are very much front and center on that. Now that these flows that are coming in from the Chinese policy banks are in support of also contracts that Chinese firms are winning in the infrastructure space or in the trade space. So they are directly helping the trade between Africa and China.
So helping to fuel that, and of course the trade finances is ultimately also a gauge of risk appetite.
Yes.
Because we saw back in the financial crisis and the recession, although it seems like if parts of the world still in recession, trade finance dried up in Africa. Has it recovered to levels pre-crisis?
Very interesting question. I think I would break it down into a few parts. Historically, Europe has been the major trading partner with Africa. However, what has happened is that since 2009-10, China has actually overtaken Europe as the single largest trading partner for Africa. So in terms of seeing the volumes grow there, absolutely there is a growth in volumes. I think depending on which publication you look at, between 11 and 15% of Africa's is the growth between China-Africa trade. If we look at inter-Africa trade, I think that is really an area which needs more work, and that has not seen the kind of growth that should be there. Yep. South Africa being the economy that has the biggest manufacturing production base, we're seeing flows from here into Africa, and they are ably supported by financial institutions, but also by government institutions such as the ECIC, the Export Credit Insurance Corporation of South Africa, which provides guarantees to commercial lenders in support of contracts that South African exporters have won into Africa and globally as well.
And is that critical right now, that in a sense a risk mitigating factor in Africa? Is that what people are demanding?
Well, given the 50+ geographies in Africa, each one has its own risk profile, each one has its own set of issues. Risk mitigation plays a key factor. So, we have the export credit agencies, but also we have multilateral institutions such as the African Development Bank, such as the IFC, who have set up specific risk-sharing programs with international banks, including Citi, to support FI flows, to support commodity flows, where in the smaller geographies where bank appetite may be limited, we can partner up with these institutions to either confirm letters of credit or issue letters of credit, and that becomes a major.
Do you think that will have a material impact for the likes of Citi? Do you see yourself being able to go into some of those territories? Do you see yourself be able to fund perhaps riskier projects because of the backing of the likes of the AFDB?
Yes, absolutely. I think with Citi we've been fortunate. We have a Pan-African footprint covering about 15, 16 countries. Now, as I mentioned earlier, each geography is different, but with these risk mitigation methods, what it allows us to do is expand the tenor of the loan profile. And given that the guarantee that's being offered by an AFDB or an IFC allows for price compression as well, where we can offer more competitive pricing as well to our clients.
And Joseph, just lastly, give us a view right now from Citi's perspective in terms of the sectors that you're most actively involved in when it comes to trade finance in Africa.
I think from a sectoral perspective, certainly supporting oil flows into Africa. From a commodity point of view, from an infrastructure point of view, we've been fortunate enough to support sovereigns and private sector corporates in the power sector. There is a major demand to upgrade the power sector in Africa. On the transport side, we've done some landmark deals with Ethiopian Airlines to finance their fleet expansion. And also more recently on clean water drinking and some other social projects which are sort of gaining traction as Africa moves to expand and enhance its infrastructure space.
Well, thank you so much for joining us today. Certainly some interesting insights into the world of trade finance and flows that Yusuf Ali Khan